So I want to kick this off. This is the AMA for Striker. And before I go into any details, just please take a look at that disclaimer and do me a favor and just type Y in the chat box that everybody agrees to the disclaimer, the risks, that we know it, we understand it, we accept it, and we can move on. Right? Fantastic. Okay, so just a little bit of an update here, and just give you a little bit of timelines. I'll be here today with Jim, and we're gonna kick this off. We're gonna go into Striker. We're gonna go through the theory. We're gonna go through the strategy. We're gonna go through the CME website. We're gonna do a bunch of things today. I don't know if I'm going to trade today. I'm going to plot levels today. I'm going to show you what to do today. I will be here for tomorrow morning. For a period of the time. Jim will take the other time, and Jim's very good at this, and obviously, you know, he runs the rooms for NeuroStreet and all that stuff. I just want to be here to kick things off since I built it, and Jim and I do it together. And does everybody understand that? It's a team effort. Make sure we're all in it together. So you won't be using TickBlaze. I know this, but I'm using TickBlaze because I'm testing it under the beta builds before we launch it. So I have to use it as our users would use it, and you know, such and so forth. But the same holds true for any platform. This is a platform neutral trading strategy, which means you can use any system or you can use any platform at that matters, right? So what I'm going to do first is I'm going to suggest that we get into making sure you have the right tools for the job. Okay, so before we do anything, I want you to just Google Quick Strike. So when you go to the CME is the Chicago Mercantile Exchange, and they actually have two versions of this. So you understand, you're going to see down here, you're going to see Bantix Technology. Bantix Technology is their, you know, top-notch version of this. And after going through all of the training videos in both of them, I really don't see the need to pay for it. Like, it's amazing if you're a sophisticated options trader and you really want to dial in the options side of the business. By all means, everything we're going to do today on the free version is completely clearly available on the paid version, but it's you know, you can just use the essentials. Try the free version. So you click on it. You got to create an account. Actually, there'll be 20 professional if you're no limit on the trial. So long story short, you click on here, you can go to CME Group, Quick Strike, and just go down here and right. I like to use this. This is the free version, right? The tools, the information for Quick Strike. If you go to the Bantix website, you're going to have to pay. You're going to have to pay a trial and all that stuff. So just make sure you register and then you create an account. It's going to ask you to 2FA every morning. They have a security protocol on their website. They rightfully so. They're an exchange, right? So, and I promise you this: if you want to go through their help guides, okay, if you want to do this, it's not going to hurt you to do this. I'm going to find the. Let's see here now. I'm going to go here to Quick Strike playlist. So we're gonna no Quick Strike CME. There we go. So what I did was I went through all of these videos and all of the different stuff. It's not an easy process, and this is what I want to explain to you. Like, it's maybe they do it on purpose to keep you from knowing it. I don't know, right? I don't really have an answer to that, but you know, my job is to make it easy for you. Okay, this is why you're here and what we're going to do. But you need this in order to do what we're doing. So if you haven't done so already, follow through on that. If anybody has any difficulty doing this, you can always reach out to Jim and he can definitely point you in the right direction. It's quite simple, it's free, and it's easy to do. Does everybody understand that? Give me a yes if that makes sense. So what I'll do is I'll put the link in here. And I think that should be the link that gets you to where you need to be. And yeah, you just register and you create a registration. And like I've already got an account, so it's not going to let me do it, right? So I can't do it for you. Now, the next thing you need to do is you need to get some ChatGPT action up in your life, right? Anybody here who know who ChatGPT is? Yeah. It's like a robot in your house. I think I use it probably 15, 20 times a day for everything in business and life. So if you're not using ChatGPT, just type a no and you haven't done it, but you got to get an account for ChatGPT. I don't think you need the paid version, Jim, for this. I don't think it's necessary.
No, free version's fine.
You could use the free version for this. It doesn't cost any money, right? Just the biggest thing you can learn with ChatGPT is the prompting. It's a language learning model, and in order to do this, you truly need to be able to communicate with it. Now, I took the liberty of saving you a ton of time every single day. And what did I do is I typed out prompt. This is a prompt. And all I want you to do every morning is copy and paste this into ChatGPT, right? This took me probably 4 months to fine tune this into getting what I need from this. And let me tell you, it's a pain in the ass having to write this out every time you want to do this. So it's better to do it once, copy and paste it. Now we'll give you a copy of this. Jim, I don't know if this is in the downloads folder yet in the website, but we can add it there. But I want to teach you what this is and why we're doing this, because this is the secret behind making your life easier, not doing it manually. I'm going to show you how to do it manually, and then we're going to show you how to do it through using AI, and you can understand the power between this. Okay. So essentially what we're going to do, I'm going to go into the CME website here for a second, and I'm just going to go here to Quick Strike. And whenever you log into a new tab, I'm just going to duplicate this for a second. There it is. It's going to ask me to go here. So it always defaults to this. And I'm going to make it a bit bigger so you guys can see the, is that better for you guys? A little easier? Okay. There's a lot of stuff going on in here. And by all means, it can be overwhelming. And all of it has relevance to certain areas, but just like any type in the financial markets, it can be overwhelming to learn something that has a whole lot of stuff that doesn't make sense. And so first things first, what I like to do every morning is I like to make sure that I set to the right market. So you're going to see here, there's a drop down up here. You just click on this little blue list here, you click on it, and you're going to go into whatever futures contract you truly want to trade. I'm going to focus on 4 today. We're going to look at the NASDAQ, and we're going to look at the Russell. Then we're going to go into metals. We're going to look at gold, and then we're going to go into energy and look at crude. Okay. So for the first part, let's just do energy. You're going to click on crude oil. It brings up crude. Okay. Now it's very important that you understand that for what we're doing, it's zero. They don't have Thomas. They don't have. Good question. They don't have micros in here. Okay. So you're going to do it on the full size contracts, and those levels are transferable to the micros. Whatever happens on the full size contracts happening on the micro. For this level, within a few ticks, it doesn't make a difference. If there's a 2 or 3 tick discrepancy between it doesn't matter. What matters is it's happening on the full contract, because that's what's driving the micro. A micro is a derivative of the full contract. So long story short, we're here. Okay. So there's a whole lot of shit going on up here. Don't worry about it. First thing you want to do, you want to click on this little button here. See how it says 0.24. These numbers are days to expiration. You don't want to be doing anything other than this one. You never, ever deviate from this. No point. If you're trading today, you need today, right? So what I like to do is, before I go start clicking all this, there's 2 things you're going to be living in, okay? So write this down. Step number 1 is you're going to be going into the vol to vol tab. So let's click on this first. Let's click on vol to vol, okay? And this is going to be your standard deviation viewpoint and your open interest, okay? Then what you want to do is you want to make sure you click on this drop down. And you see how this is highlighted over here? You need to make sure that you're looking at 0 DTE or less. See, it says 0. Let me just hover over it. It says contract expiration, 0.24 DTE. That means it's less than a day. Okay. So you always want to make sure you're on the 0 E contract. Okay. If you're ever confused about that, watch what happens. What you do is you just automatically come here to Quick Strike and just go back to the dashboard and you click on here, go there, and then you just click on here. Okay. If you're ever confused, I'm going to click on crude, click on here, and then just click on 0.24. If you're ever confused on which option you're looking at, there it is. Okay. And the cool thing is, okay, the cool thing is that, I mean, you could have all this up here. I just prefer to go to this page. It's cleaner, it's easier, it's more space for me. So I just click on the vault to vault. Okay. Now, the first thing you're going to do here is you want to double check your contract. If you're on the wrong contract, it's going to screw you up. Okay. Everybody understand that? I just keep rehashing that over and over again so that there's no confusion. Okay. You're going to go down here to open interest. So you see this, you're not looking at intraday, end of day, you're going into open interest. Click on OI. This is your playing field for the day for crude oil. This is literally the institutional playing field for crude oil. Now, this has got a lot of information going on it, and I'm just going to make it simple for you, and I'm going to keep it really simple. We're going to just focus on a few things that matter the most. Okay. We're going to focus on these 3 different colors. So we're going to draw a divider. I'm going to change the color here so you can see it. Got a divider line, divider line, divider line, divider line. Okay, to the edge, to the edge. Remember what I said about the bell curve? We're going to do that. So 1 standard deviation, 2 standard deviations, the edge of the bell curve. Everybody understand what I'm doing here? I'm mapping out the likelihood of price going to a certain area of the day. We haven't talked about anything other than just, I want to make sure you understand some of the more foundational stuff here. Once I teach it to you once, you can watch the recording and it'll be very easy for you to understand every single time. Okay. Now, what's really cool about this and what's really cool about the CME website is that it takes well, Sean told me this out of this bullshit. I'm not doing anything other than explaining to you how to read complex stuff, make it super simple. If I click on this, what does it say? It says, at the current volatility level of 53.13, the underlying futures price at expiration is expected to be in the range of 67.82 to 73.63, 99.7% of the time. This means that there's less than a 0.03% chance the market will go outside of 73.50. That's a pretty damn good odds, yeah? Like, to know with a 99.7% chance of probability, the institutions, remember, this is their information, it ain't going past this level today, period. Now, we're not trading at 73.50, but that's a pretty good understanding that you never need to look outside of that today. Or 68. Like, don't bother looking outside those levels. There's nothing going on there today. You'll never get there. And if it does, it's because COVID 3.0 hit and something happened with whatever. Like, unless it's a catastrophe in the world and the whole world turns into lava or something, like, it ain't happening. Now, that's pretty valuable to me because that tells me that I never need to question where the market's going at a maximum. I haven't even looked at a chart yet, but I know for a fact that the institutions have positioned their hedges to keep the market in this range for the day. Does that make sense? Now, that could be a really big trend before we get to 73.50, or it could, right? Or either way. I'm just letting you know that there's less than a 0.03 chance it's going to beat that. Okay. So what we do is when we're thinking about current price, who has the current price for crude oil? Can somebody tell me the current price for crude oil right now? Yeah, you're going to get a copy of this, Ford. Not a problem. 70, 74. Okay. So we're sitting here at 70. We're like right here. Yeah. Okay. So that's where we're sitting at right now. Current price. Okay. Now, the market could trend this way or that way for the day. It could create really big trends, or it could oscillate. It could do a lot of things. It's not my job to know that right now. It's not your job to know what the market's going to do. It's your job when you learn this to understand what this information is designed to tell you. Okay. So the two most important things to pay attention to are these colors right here. Now, I'm gonna cause your brain to flip on its axis for a second. We're gonna get into some theory. Okay. We're not going on the charts just right away. Okay. I have to teach you the value of what we're doing here first and help you understand what's going on. We're going to do some reading together here. I know that you say, oh God, I don't want to read. You have to. You have to understand the why before you understand the how. Okay. Very important to me to teach you the proper mechanics of this. Using CME options level data provides futures traders with valuable insights into the market sentiment for support and resistance, and also volatility, which is known the bell curve. It allows you to analyze the put and the call ratios, open interest, and key strike prices to gauge market positioning, potential price movements. These levels help traders make informed decisions and refine their strategies based on options activity. And it's very important that we focus on short-term trading decisions using 0DT options, because we're looking at day trading data. We're not really swing trading the markets here. Okay. Now, the key purpose of this is that it's all to do with hedging. It is all to do with hedging. It's options on futures is all to do with hedging. And hedging in options is a risk management strategy where traders use options, puts, and calls to protect their underlying futures positions from adverse price movements. So let me explain this. The reason this is so valuable is because an institution that's hedging crude oil, it's because they probably own 15 tanks of it. They've got a few ships traveling across the Atlantic. They've got a few freaking factories with 100 million barrels of oil or whatever you want. They've got there's a relevance to the institutions putting on those hedges. Has nothing to do with whatever's going on in the day trading realm or whatever's going on in the market or, oh my God, there's a trend today. Or none of that shit's even important to these people. Do you think somebody in China who's talking to somebody in the United States about 5 tanker ships traveling across the ocean with their oil barrels full of oil, okay, or whatever it is they're transporting, maybe it's grain or maybe it's corn or maybe it's orange juice or pig bellies, whatever. If it's traveling across the ocean, they got to hedge it because it's an insurance policy on their underlying asset. Does that make sense to you? Everybody understand why this is so valuable to know this? Has nothing to do with technical information going on. And this is why, when I'll give you an example. I was reading some of the institutional books that I was telling you about. And this is serious. Institutions, like really, really powerful players, they pay to create satellites to fly over farms and fly over tankers to see the levels and the production of their growth on the farms. If they don't see the farms growing at a rate of what they're expecting, they're going to start hedging on those commodities. If they see that there's oil inventory levels in big silos lower, or their inventory supply is higher or lower, like this is the level of what these institutions are doing. They're dealing with billions and billions of dollars. And then when that happens, they hedge based off of the data that they're receiving from an analyst perspective. Their analysts or their data on the satellites or their data from fundamentals is telling them, hey, we need to put an insurance policy out on what we're doing. And that's what a hedge is for. So that the price of the underlying asset doesn't go beyond certain aspects. Does this kind of understand the power behind the information? It kind of gives you a little bit more of a reason to like want to learn this stuff. Because once you understand it, it has nothing to do with respect for it. I think that's a proper word to use, respect. You respect the levels differently. Did you lose me? No sound? I've been having internet issues. It's been dropping in and out. You got me? So it's about respect, right? Knowing this information is about having a bigger level of respect for the data. Does that make sense? Now, this is where your mind is going to do a what? Because in options, in traditional options, if you learn how to trade stock options, you can be a buyer of options or you can be a seller of options, right? You could be a buyer or you could be a seller. Okay. And if you're a buyer, you could buy calls or you could buy puts. Or if you're a seller, you could sell calls or you could sell puts. Okay. Does everybody understand this? To be a buyer does not mean bullish or bearish. This does not mean that you're bullish. This does not mean that you're bearish. Just because you're selling options does not mean you're bullish or bearish. It's the decision that you're doing to participate in the underlying asset. Now, I know this is a little bit of a deep dive, but I'm trying to make it super simple. If I say I'm buying options, buying calls is bullish and buying puts is bearish. Okay. And the only time I want to be buying options is when implied volatility equals low. That's just the truth. So we're not buying options. We're not buying any options. We're not doing any of this, but you need to understand a few things. If I'm a seller of options, to sell calls, okay, is bearish. And to sell puts is bullish. It's reverse. Okay. And the only time you do this was implied volatility is high. Now I want you to understand something. If I have 0 days to expiration to cover all of my hedges, would you expect volatility to be low or high? High. If I got 1 day to get my shit straight with all these big positions, okay, all of the information that we're going to be talking about is institutions selling options to hedge their positions. Has nothing to do with buying options on 0 DTE. So everything that we're doing, puts and calls, are from institutions selling puts and calls. So you understand this, okay? You understand what I'm doing here? And it has nothing to do with premiums, it has nothing to do with collecting, whatever. It has everything to do with hedging to hold the market between certain price levels so they don't get caught up shit's creek without a paddle. You don't want to be canoeing without a paddle. I can promise you that. Now, let's talk about this for a second. Puts are option contracts that give the holder the right but not the obligation to sell the underlying asset at a specific price point. Okay. We're not going to worry about that. What matters is that you understand that it's bearish sentiment. Puts are often used to traders expect a decline on the underlying asset. So if puts are bearish, right, by nature, if they're hedging, high open put interest means those are support levels. They don't want it to go below. They don't want the bears to go below certain levels. So this is where it really took my mind for a kind of a win-win, like what? Like I had to spend some time on this, and I got a lot of experience with options. So even me, if I have to take a few takes at it, to like what the hell does that mean? I just want you to understand something. Puts are key support level. Calls are resistance. I know I just went down a rabbit hole, but if you just remember these two things, puts are support, calls are resistance for everything that we're doing. That's the Cliff Notes version of this. I don't want to go down too much onto that. Okay, guys? We don't need to be worrying too much about all the other stuff. You don't even need to learn it. All you need to do is, I just taught you the theory, the quick how, but all that matters is that you associate puts with support, calls with resistance. So let me show you how to make this easy. Puts are orange, calls are blue. Support, resistance. We're trading here. Current price. This is prices above, prices below. We look at the blues above price. We look at the oranges below price. You see how I just took that real complicated stuff and made it super simple? Very easy to learn this. Colors, basic knowledge. You must know where you are trading. You need to understand resistance above, support below. Make sense? You guys got my audio still? Everybody with me? Type of Y in the chat box. You're with me right now. We've got a good connection. Double checking. Jim, you're going to check in with me a few times on that. It's killing me here.
You're good.
Okay. Does everybody understand what I just said? Okay. Now let me ask you a common sense question. As I start getting outside of the bell curve, what do you think the levels start to become? If I start getting further and further and further from current price, what do you exactly? Now, I can promise you this. The simplest way to understand the likelihood of these levels being major levels is the height of these histograms. You see how this one's a bit smaller, bit smaller, bit smaller. It's a medium-sized one, medium size. But look at this one. Holy shit. This one's massive, by the way, 71. So what I do is I like to pay attention to the standard deviation. I like to see, do I have any big walls here today? Do I have any big walls here today? I have a big wall there today. Huge walls at 70, 50, 70, 30, 7. This is a major level of support. I like to look at these as support level walls. So like that would be a wall for me, right? This is a resistance wall for me. We're going to get into the chart and show how to do this. You got to understand, this took me months to perfect it. I want to teach you the golden nuggets while I have the time to do it. Okay. And we're going to get in here. We're going to do all the markets today. We're going to do it together. Okay. So puts are what? Calls are what? Puts are support, calls are resistance. The put call ratio is just basically the comparison of the ratio. Like if you look at the put call ratio here to like the level of puts, the put call ratio, the level of open interest on puts is a hell of a lot bigger than it is on calls. Okay, like you can see, or excuse me, calls, my mistake, calls. The level of calls here, the blue, okay, is a hell of a lot bigger than that of the puts, right? Makes sense. Calls are resistance, right? Resistance above price, huge call option, small put option. The ratio between those two, it's clear. Like you can even see here, like look at this, even though we have, look at this, this tells me that there's more support above current price, which is a contradictory data point for me. 72 could be support if we got above it. Lance, yes, that's the key. If we were trending and you were trading with a trend, you could use that as support. Absolutely. We'll get into that later. That's more complex, so we're not going to start with that, but that is like where you could take this. Yes. Step first is yeah. Slow down, guys. Let me just get through the data and then I know you got a lot of questions and we'll get into as many different scenarios as you can because this picture changes the market. You're going to see a different picture every day, which is going to make your brain think differently. So you always want to stick to the foundation of resistance above price, support below price. We're going to wait till you nail that. And then we're going to nail how to trade trends. I'm going to teach you because you could take a broken support. You could take like, let's say this level here, big resistance, right? Let's say that was this level here. The market comes up, we get a nice reversal, but that level has been played. And if we break above it, it could definitely be huge support. So this is resistance now until we get maybe above it, hits support, and then bounces. Now, it's hard to visualize that looking at this graph. So we're going to go on a chart and do that. But we're going to talk about that after. I need to make sure you understand the details. Okay. So a couple things here. Strike prices. Okay. All these are is the prices here. 70, 75, 78, 71, 73. These are the strike prices that have all the options contracts on them. These are all a strike price. That's the key. We're not looking at many. Sometimes it goes in increments. Sometimes it goes in 5-cent increments, 10-cent, 20, 50. Sometimes on the S&P, you'll have 50-point increments, right? So this is the key thing, okay? So this is what I'm going to do is just make sure you understand the strike prices, which are the numbers below, okay? Open interest is what we just described. This is the open interest at a key level. So when you have open interest, what this open interest is, the higher these bars, the bigger the open interest, which is the left axis over here. You can see these are an open interest number, okay? The bigger the bar, the higher the open interest. Open interest is hands down the most important thing you can learn here because it's the open interest on those hedges. Open interest always comes first as the primary foundation to the system. Okay. Then you go into zero DTO. We just talked about that, zero DTE. And these are the two things I want you to understand. I'm not going to put an emphasis on delta. Delta in here is fine if you want to add a level to it later, but the big one here is gamma. Gamma. Gamma measures the rate of change of delta with respect to changes in the underlying asset. Essentially, it indicates how much delta will change as the underlying price moves. Why is it important with zero DTE options? Now, we're not talking GEX. If you were to Google gamma exposure, GEX, we're not talking GEX here. We're talking today's zero DTE gamma, okay? It's high sensitivity. Zero DTE options have extremely high gamma This means the small movements of the underlying asset can cause significant changes in delta. Market makers and large traders, key word here, hedge their positions based on delta. With high gamma, hedging becomes more dynamic and frequent, leading to increased price action around key strike prices. High gamma at specific strikes can lead to price pinning, where the underlying asset gravitates towards strikes with significant open interest as hedgers adjust their position. This makes gamma a critical indicator for identifying key levels on intraday 0DT options. Conclusion. Gamma is crucial for understanding the potential volatility and price movements in 0DT options. Its high sensitivity makes it a primary factor in identifying intraday support and resistance level. If you took all of the Greeks and you just focused on gamma, that's all I want you to understand, okay? It's all we're learning here. So what we're going to do, and this is a daily process, is you're going to load the image like we talked about. That's that example 1, right? You're going to see the puts and the calls. We just talked about that. 1, 2, 3 standard deviations. And you're going to identify the bigger levels, okay? Then what we're going to do is we're going to identify gamma at these levels. Now, remember, I haven't showed you this graph, so let's take a look at it. So the other option here, let's just take a look. We're going to right-click here, it says open interest. Remember, we're on the vol to vol page. We're going to go over here to the open interest page. We're going to open here, right-click it, open a new tab. Can't do that because I always duplicate the tabs because of their I think of the 2FA stuff, they don't let you copy the pages. So I just go here and hit open interest, okay? Now here's really important. We're not looking at this. Don't get confused with all the graphs. You're going to go down here to the heat map. See this over here? It says heat map on the left-hand side. Click on open interest. Okay. And we're going to click on 0.23. You got to click on the 0.23. Okay. So the first thing you're going to do is you're going to open interest. Remember, there's 2 pages. This one is the vol to vol. We're going to go to open interest. Click on your 0DT option, not the 1, not the 2, not the 5. The one that says 0 you could be doing it in the overnight and it says 0.8. You could be doing it in the 3 a.m. in the European Open and you're trading the Globex session. You could be 0.5. We're at the end of the US session is the tail end of all the markets. So I don't know if you understand this, that the markets start in Asia. They go to Australia. Then they go to Europe. And then they end in the United States. We are at the tail end of it. Now, what we're going to do here, and this is very important, don't get confused by all this information because it can be quite overwhelming. I'm going to simplify this down. You're going to click on 0.22. Well, it's because you probably, Leonard, you probably either have to go back. Yeah, if I right click here, watch this. If I go here, right click and hit open link, so here it says blocked. Yeah, if you're seeing that, it's because you didn't do what I did. Take the tab, right click it, hit duplicate. The reason for it is it's an exchange website, so they make you do the 2FA on every page. But if you duplicate the tabs, I found a way around that. Yeah. So go here, hit 0.22, hit open interest, and then just go right up here to the Greek and find gamma. Bingo, bango. Wow. Look at the gamma here. Okay. So this is interesting. Very interesting. Okay. Now I like to go out 25 strikes. I like to do that. And then I like to make my page a little smaller so I could take a screenshot of it. We're going to get into screenshots next here. Okay. So I like to do that. And just like that, we're going to take a screenshot. We're going to get into that. Does everybody understand what I did? I pulled the gamma. The gamma that I'm concerned about is this. It's only this column. Only the one on the left. Why is that? That's the whole point here. We're going to look at that because that's today's option. It's the end of last day. So we're going to go in here. Okay. And so now I've got two images. I've got this image, which is my vol-to-vol open interest. Okay. And then I have this one here, which is ultimately my gamma open interest, this, and I click here gamma. Okay. Now let's go back. Summary. When we take all this data, our job is to put it here on the chart. And you say, Sean, that's a big process. I thought you said this is going to be easy. It is easy if you follow what I'm about to show you next. Okay. If you just wanted to do it visually, it would be difficult for you to do gamma. Okay. You could visually do this easily. I can teach you how to plot these levels easily on the chart. Okay. But if you want to make your levels more powerful, I'm trying to teach you the importance of adding gamma to this. And the way I've been doing this to make it fast and to make it efficient is I use ChatGPT to save my life. Okay. So I'm going to show you what I do here. Okay. Now, before we do ChatGPT, I could easily just come in here and draw resistance lines at these strike prices. I could draw resistance at 71, 71.50. This one here is, it's got good resistance, but this one's got more resistance. This one's got big resistance. So I could pulls on my chart right now, but I don't know the relevance to gamma on those levels, which is one of the reasons why I spend a lot of time studying the relevance of the Greeks in intraday options, not so much on for the weeklies or the monthly holds. Okay, so what I'm going to do is I'm going to show you how I do this. Okay. I talk to it like a human because it prefers that. I know that might sound weird. Great. I'm about to post some images and prompts for trading. Then what I do, I just copy that little document page here. Did we lose sound again? Did we lose sound? Testing, testing, testing. Did we lose sound? You
Nope.
have me?
I didn't lose
Okay.
anything. You've been
Thank you guys.
clean.
I'm just going to copy that prompt that I gave you, right? So I gave you this. This is a prompt, okay? You don't need to make it all fancy. It can read, copy and paste. Okay. But what you need to do is you need to come in here and you need to put current price so that it knows what current price is right now. You also need to tell it what market you want to use. So what I'm going to do is I'm going to find current price. What is current price for crude oil right now? Can anybody tell me what current price is for crude oil? So 70.59. Okay, 70. What is the price? I'm getting 5 different numbers, guys. Can you guys, somebody give me the actual
70.60. It's right around 70.60.
70.60. Current price is 70.60. CL crude oil. Okay, I just like to put the current price and then for crude oil. Always hit shift, enter, enter. And what I like to do is I like to just take a screenshot of this. So you're going to need a snippet tool for this. Okay, I'm going to just take a screenshot. So I'm going to go into ChatGPT and I'm going to post the image. I'm going to go back. I'm going to take a picture of the gamma levels. I'll give you the prompt, Ben. You don't have to think on your own. Don't worry about it. So I've just posted 2 images and I've given my prompts. So it's going to analyze the information. I'm asking ChatGPT. I don't know if it's trying to give me an image here or not, but it looks like it's giving me an image. I don't understand why it would give me an image, but okay. Don't give me an image. Okay, so here it is. So it basically did all of that. Okay, cool. It gave me an image. I've never seen it give me an image today. Maybe they're updating their ChatGPT stuff. Look it gave you a cool picture of what we're doing right now. Never seen that before in my life. Gotta love AI. Jim, you ever
Save
see
that
that?
picture. We could use it for
Wow, that's
we could use
cool.
it for marketing maybe. It's funny.
Heat map. Yes.
Yeah.
Anyways, you gotta have some fun in your life. Okay. So you see here, and this is something that AI is notorious for, so you may have to kind of direct it a little bit. And I like to tell it when it made a mistake. You skipped strike prices. Don't do that. Give me all of them and rank them like I said. Sometimes it likes to get fancy and it's going to tell you. Look how look what it's taking the information and it's basically making it so what it did was it just took all the information from open interest and it took all the information from gamma and it explained why it's telling you. And then basically it ranked them. You see that? That's pretty valuable right there. That's the key. So let's go into crude oil right now and let's do this together. Now, we're working on an attach all function for tick plays. Right now, we don't have the ability to attach all yet in the drawings. It's coming in the very, very near future. So if I draw levels on my range chart, I won't see them on my volume. So it's just the evolution of the platform, but it's almost finished actually. So that's good. So let's go to crude oil and let's find strongest support. So strongest support is 69.50. So what I like to do is I like to just map out my strongest levels first. You can do it however you want. And the reason I do it like this and I like to dash them. I like to identify. Yeah, if your levels don't match Jim's, you definitely know your AI is off today. Yeah. Blame it on the AI. Right. I like to dash my levels. Dashing it tells me that it is the strongest level. For me, this has just been my practice. You could put whatever you choose, right? And the strongest resistance is 73.50. Now, we may never get there today because most likely these could be, but I don't know. Do we have news today on crude oil? Is it inventories today?
What's today? Wednesday? No, it's actually tomorrow. They bumped it back because of the bank holiday.
73.50. So I've accomplished my best levels, yes. So if I ever get to one of these levels, the likelihood of me taking a reversal off these is very, very, very powerful for me to consider this. Does that make sense? Why? Because based off of open interest and gamma, it's telling me these are the two biggest levels for the day. Does that mean it's guaranteed? No, there's never a guarantee in anything in the financial markets, but the probabilities went up drastically. But we may never get there. That doesn't mean it's not the strongest. There's still very strong levels here and here. So let's go here from current price, support 69.50, 69, 68.50, 68. Okay. These are the strong levels. Okay. 73.50, 73, 72, 50, 72, 71, 70 resistance. So let's go here and let's start plotting these out. 71 is strong resistance, right? Pretty interesting how it just nailed that. Now, like I said, normally I would have this done in the pre-market. We're almost going into the US Open. We're not going to be trading these levels. Look at how it reacted off 71, right? Like that's pretty powerful. 71.50 is weak resistance. Okay. 71.50 is weak resistance, but it's still resistance, right? You might want to change the thickness of this and do like that so you can understand it. 72. Copy and paste your levels. 72 is moderate resistance. So like you could do maybe a different thickness level. If it's big, you could obviously make it thicker so you understand that, right? It's supposed to be like, this is how you could keep it super simple for yourself so you understand thickness could be stronger. And 71.50, 72, 72.50 is weaker resistance. So I'm just going to copy that. And 73 is moderate resistance. Right? And that's my grid for all the hedges above me. You can change the levels, change colors, do whatever you want, guys. This is you guys have the ability to do that. Okay. Does everybody understand what I just did? I just mapped out the playing field to the sell side of the market. Now, if we go back into that picture, $73.50. Clearly, that's the biggest support resistance, right? You got 73, you got 72.50, you got 72, you got 71.50, which we're trading at. So I'm not going to be using this as a level. Okay. But if you notice how it didn't start really giving me any support, let's do support now for a second. So we've got strongest support is 69.50, which is what we mapped out here. Moderate support. So let's copy one of these mid color levels and bring it down here to 69. Right, you can go to 69. And then ultimately I have 68.50, which is weaker and weakest. So these are pretty weak levels down here. So there's a very good chance. So 68.50 and 65. 68 and 68.50. They're weaker. So do you think knowing this data, like just like it tells a story here? Strongest resistance is we got strong resistance. We got strongest support. We don't have any strong support in here other than down here. So if I get to strong resistance at 71 and I don't really have any support, what do you think's likely to happen with crude off 71? Like it's going to drop down to the support level. There's a pretty good chance it could do that. Now, if I go here to the image and I go to 70, like I'm asking myself, okay, 70. 70 is right here. 70's got support. 70.3 has got support, and 70.5 has got support. Okay. And sometimes the reason why AI doesn't pick these levels up is because there wasn't any gamma backing those levels. So there's a fine line between using the gamma with your level or simply just using common sense to see the picture. Because if you're trying to figure out, well, why didn't I pick this wall up here at 70.50 to 70.3 to 70, right? This is a wall of support, but maybe the gamma has gone on that. Maybe there wasn't much gamma. And that's probably why the AI didn't assess that. Now, here's my suggestion. And this is how I started, okay? I didn't use gamma right out the weights. I looked at standard deviation and imp options open interest. And there's a reason for it. Because you may find that you don't want to use the ChatGPT route, which is totally fine. It's a fast way to simplify uploading 2 pictures and give it a prompt, right? You could easily just do this. Watch this. I want you to disregard gamma and only use my open interest image for mapping out all the put support levels and all the call resistance levels above and below current price. Don't skip strikes and rank the support and resistance from strongest to weakest. So all I'm asking it to do now is just look at the one image. And for some reason, it's still not telling me that 70.50 is important. So what I'm going to do is I'm going to ask it. I'm going to say, why are you skipping the 3 strong put levels at, what are the 3 prices, Jim? Can you tell me? It's 70.5, 70.3, and 70 at 70.5, 70.3, and 70. Is there a reason, or are you just on your first cup of coffee today? Right? Haha. Definitely need a second cup of coffee. Do you see what I just did?
It keeps telling Sean he's really bossy.
You got to remember, AI is a tool to make your life easier. It's not perfect, and it is not the holy grail. And take a look at this. Definitely need that second cup of coffee. You're absolutely right. I missed those important levels. Let me correct that. You see what it just did? If you see the picture, and for whatever freaking reason, you say, hey, wait a second, why isn't 70 there? Just say, hey, bingo, you missed something. But like I said, the reason I like to use ChatGPT is because it can be a streamlined tool to map out sorting these levels without having to think so much. But you still need to exercise the aspect of this. Now watch what I'm going to do. I'm going to just make this a little easier. Okay. So let's just double check the levels now that I was able to go in and see something. And I'm doing this very slow right now because I want you guys to see something and understand it. So let's talk about support levels below 760. Strongest support is 750, 70.50, which is what we're sitting at right now. Second strongest support is 70.30. Strong support is at 70. So you can take a look at what it did. It's the reason why it's stuck here and it's tight is because it's stuck in a wedge. That's the reason why it's just sitting here right now. It's stuck in a wedge. And I don't know what's going to happen with news today, but it may take news to break it out of here. But look what it did. It came right down from 71, 70.50. And you see how it mapped out the difference? So 70.50 is the stronger support for the day. It used to be down here because we corrected that. Does this make sense? So we're going to take this now. We're going to put this as 70.50. Strongest support. We're going to change this to a dotted line. There it is. So for me, if I know that this is the strongest support level for the day, and this is the second strongest, okay, that's pretty important information for me. If you take a look at it in the overnight, it came down in here real heavy in the overnight. You see that? And like this is where, like, if you were trading at 7 o'clock this morning, crude oil trades early in the pre-market. It came in here, came into that level and reversed out. You see that? Came all the way up to the next strike and 71, strong resistance. And I just answered that, Michael. I said, if I'm excluding gamma, I'm just using open interest. Open interest is hands down the most important. So if you're going to just simplify your entire process, truthfully, if you have the patience and you want to add the gamma and you want to upload those pictures, it can only add a level of probability. However, it is not mandatory that you use gamma. It's mandatory that you use open interest. Period. And standard deviations. Make sense, guys? Now, that's pretty solid accuracy, but I don't want you to start thinking that you are Ray Dalio because you called those to the tick, right? I'm not interested in catching the perfect entry. I'm not interested in timing it to the exact tick. That's not how professional traders think. They do not think from a levels of, hey, look at, I was right. It's not about being right. It's about being understandable of what you're doing. Okay. And understanding what this information is telling us here. Okay. So let's map out the support just again. Let's go down to 68 is weak support. Yeah. 65, 85 is 68 weak support. 79 is weaker support. Okay. 79.50 is moderate support. I'm going to change this back to a solid. Put it down here. Okay. So these are now, just because it says moderate or strong, like sometimes the market does what it does, but you need to understand why it's ranking these because of the data. The data is telling you that these levels are ranked for a reason. 70 is strong support. Okay. And then you've got these are the two strongest. So if you take a look at this, we're getting an entry pattern here, which we're going to talk about here in a second. But there's a very good chance this could lift and rally up right here. I'm going to wait and see. And let's map out resistance. So 71 is strong resistance. 71.50 is weaker resistance. 72 is moderate resistance. Yeah. 72.50 is moderate resistance. We're going to change that now because it was. And 73 is strong resistance. So I'm going to make that bigger. I don't like having too abrasive levels here. Just a bit too much for me. There you go. The reason I do this and the reason I change the thickness, you can do with both. Like here's the thing, right? For weeks, I didn't use gamma. I just went into a very big process of studying the Greeks and what they're telling me. And out of all the Greeks, gamma is the most important for zero DT options. But if you were to rank the importance of all of this information, it's open interest. Bill's asking a great question. Sean, so is there a time frame parameter for the levels to live within? You want to know the truth? I have seen really random shit on the CME website. I don't think it's pegged to a specific time. I think it's pegged to a change in fundamentals. So if there's drastic changes in open interest on certain levels, or if there's something that just randomly changes in the options queue, then ultimately that is when I would expect the data to change. I don't normally ever change my levels in the morning. I've never done it since I started doing this. I know Jim's done it a few times. For me personally, I'm not trading the afternoon. Like I'm not sitting in the day and doing everything all day. Like I come in the pre-market, I'm here an hour before the market opens. I plot my levels, I have my coffee, and I just wait for my entry patterns. And I don't know what's going to happen. I don't know if the market's going to trend or if it's going to oscillate or whatever. I just know that I'm interested in trading reversals on key levels, and I wait for my entry pattern. Makes sense? So right now we're getting an entry pattern. What is an entry pattern? We get a down and an up flip, and we get a break of the highs. I know Jim has it in the cheat sheet that you could enter on the break of the highs. I personally wait for a higher close. And if it runs away, then I put a pending order back here and I try to get filled on a retest. And if it leaves without me, then I just leave because the market does what it does, right? The levels do change during the day, but only based on changes in fundamental data, not based on time from what I can tell. However, I will send an email into the CME and see if they can get back to me, but I'm not really that important to them, right? Right? Now, has everything made sense to so far based off what I've said? I know it's a lot. And you might say, well, wow, that's a lot to do. You don't actually need to do the AI chat GPT thing. Like it is something that I felt to be very cool and very efficient and very streamlined, right? Watch what I'm going to do now. Okay, so I'm going to leave crude for a second. Normally, I would want to see a higher close here. Normally, I'd want to see a higher close. We're going to wait and see what's going to happen. This is strong support. If I can get a higher close in here, remember, this is strong resistance here too, right? But this is strongest support. So I will always put an emphasis on strongest over strong. It's just the data is telling me to do that. Now, what is the entry patterns? Let's get into this. We haven't talked about the range charts yet. We haven't talked about using crosses yet. So an entry pattern is simply just, it's a candle pattern. Okay. And you've got cheat sheets for this. We're going to go into this and Jim will spend a lot more time. There it is. There's the higher close. Okay. So what you can do is you can basically, I would basically try to enter on this right here. This is a higher close and, right. So I would just enter a market. I would try to get in on a higher close, whatever I can. If it hasn't run away from me, that's a great sign. And so let's talk about this. I'm in a sim account, right? We're just doing what it is, right? And so let's talk about this. Let's go into the data. I'm on crude. I'm entering at 70.60. So 70.60 is here, 70.50. So 70.80 is a target. 71 is a target. That's the next two strike prices, 70.80 and 71. So I'm going to split my positions, right? If I had entered up here then I'd be using 71, but I have an opportunity to put 70, 80. That's the two strike prices. I got to take off some positions here, guys, because I clearly just hit my first target really quick. I'm gonna move my stop to break even. Whale bar is just a term, Lance. Whale bar is just a term for what I just showed you. It's a whale bar is a whale bar, but let me explain what I'm looking for. I'm going to show you my my bread and butter here on this, and this is my process. Okay. Let's say I've got a level like I just did. Normally you would enter here because that's the bar close and it's close to the break. But by the time I got my orders in, I actually got the market came lower. So I just entered at buy market. Okay. So here it is. Okay. This is the level. So what I want to see is I want to see a down candle. Okay. And then I want to see an up candle, right? There's going to be two patterns. There's going to be an up candle. And then I need to see it break the highs of the up candle. And I need to see a higher close. If it does the down candle and I break the highs and I get a higher close, so I'm out. I'll close that position. So I got a scalp on that, but by all means, you could have definitely just held on and left it to 71. But if I get a higher close and a higher break right on this, and it closes on a 2-bar pattern, well, then that's that, right? So let me explain something. Let me show you the pattern. Like, let me just go and let me show you an example here. Okay. So let's say I'm coming down. See, it's coming down. Hits the level. Down candle. That to me is a down candle. Closed up, but that's a down candle. Look at the tail wick on that. There's another down candle. There's an up candle. But we didn't break the highs, and we didn't have a higher close. Another down candle. There's an up candle. Okay. That right there broke the highs and closed higher. So this to me, right, would have been a stop for me. This is an honest stop load, right? Came down. There's a higher close and a higher break. To me, that is an entry bar. Okay. That to me right here is an entry candle. So this would have been a stop loss. Here, we broke the highs. We had a higher close on a 2-bar pattern. Okay. You have the opportunity on this environment. This can be done on a 2,000 volume. It can be done on a 10,000 volume. It can be done on a 5-minute chart. It can be done on a 4-minute chart. You can do it on a 15-minute chart. The difference is the lag in the symbol. The 2,000 volume is anywhere between a 1 and a 5-minute chart, depending on volume in the market, right? It's a timing chart. But let me explain what I'm seeing here. Okay. This is strongest support. This is strongest support, right? These two levels are strong support. If I don't get the opportunity here, does that mean I'm not going to re-enter here? No, my job is to trade. My job is to take a trade. I believe in the levels. Always, always, always. Why? Why believe in these levels? Because you never know if you're going to get the perfect entry. Maybe they want to build a little bit bigger of a position on that hedge and then keep going. Does that mean you don't want to take the next 2-to-1 R multiple trade because you had a 1 hour stop out? No. It means you just need to get back in and shake it off. right? Now take a look at this. Breaks the highs and it closes higher. At the close, okay, I normally will enter anywhere from the closing price down to the high of that wick. To me, that is my entry room. Okay, that is my entry room. And I can either put my stop below the low, but if I've got a support level here, there you go. So let me just show you this. If I've got resistance up above me, way up here at 71, pretty good spot for a target. Does this make sense to you? This was the entry pattern here. Now, Jim, can you do me a favor and just keep these three strike prices for me? 70, 50, 70, 30, and 70. I'm going to go to the range chart for a second. So let's just mark them here. What was the number? 70?
30, 50, and 70 even.
So 70, 30. 70, 50.
And then 70 even.
Mm-hmm. So what's unique about using the volume pattern, or if I'm using a volume chart, or if I'm using a range chart, what I've done on the range chart, okay, is take a look at this. There's two ways to enter trades. You can use a candle pattern method, which can be the 5-minute, or you can use a volume chart. Either way, they're both valid. I like volume. It's just I've always gravitated to volume, and I'll give you my volume fractal conversion document so you guys can go in and take a look at it. But if you're using range charts, I need you to understand the EMAs that we're using. Okay. For timing the entries, it's just the black and the white. I'm just looking for crossovers to show me that the market is stopped and starting to reverse. And I don't want you to pay attention to, is it a trend or a non-trend right now? Because reversals are going to be reversals and trends are going to be trends, right? And you got to just choose, are you trading reversals? Or are you trading trends? Okay. So if I looked at this level here for a second, I'll just put 70 here. 71 was the resistance, right? If the market's coming down to this level, strong support, strong support, strong support. I got a crossover here, which would have given me that here, which means I could have entered here, which would have given me the same stop loss as I did on the other pattern. So there's nothing you could have done on an entry on that trade. It's one of those things. They were taking it slightly lower. They swept the low to fuel the hedge to bring it to the next resistance. That's simple. And you don't know that they're going to do that. So I want you to write something down. We never know if the level will hold. Your job is not to know if the level will hold. You will take a chance at that level. That's important. Does this make sense? Your job is not to know if the level will hold. Your job is to know why you would even take a chance at trading on the level. This here gave the cross. You enter back on the pullback to the EMA. Same thing here. You got the hold. It gave you another cross. Big trade. This is a reversal. I'm against the trend. So if you want the EMA period, the yellow is a 144. The red is a 55. The blue is an 89. And these are 5 and 13ths. They're on the cheat sheet. Okay. So the reason I do this, the reason I have EMAs on this chart is because sometimes the market's strong trending. Like sometimes the market will be trending. And even if I took a resistance level long or short, like if I'll give you an example, right? Like if the market's strong trending like this, you see this? And I get up to this area like yesterday, and I'm still strong trending down. That's great. I can see the trend is down. I can see that if I took a resistance short here or here, and I took a crossover here, I waited for the candle pattern, right? I can see that the trend is down. I never consider a trend change until I see the 55 and the 89 above the 144. I just don't really consider that a trending market. Like it could be moving, right? Like right now, is the market trending? No, the market's not trending. The market is sideways, right? All the bigger EMAs are in between each other, which just tells me that they're just keeping it where? Where are they keeping it? Between strong resistance and strongest support. That's it. Now, remember, if you take a look at this resistance level, could you have played both of these? Yeah, you could if you choose to. Think about this. I got the lower close. I took out the candle here. Look at this. I got a break of the lows here, but I didn't close lower, did I? I got a lower close here, which means for me, I am willing to enter this trade anywhere here. To me, I'm willing to enter that trade anywhere there. Now, that may not be an order block. It may just be whatever. It could have easily closed right at the low. It could have done whatever, but I'm not going to, like, that will be the last chance I would take the entry in this location. From this close up, it's a willing retest. Now, you could have very well traded that short and you got a 1-to-1 trade out of that level. I just took it on the other side because I missed the short. Does this make sense? We're in a range bound market. Why not trade both sides of it? You have that choice. If this was weak support and weak resistance, I wouldn't be dabbling in here. Now, here's the rule of caution. Maybe it's just a setting, Stefan. Maybe I forgot. I prefer me. Okay. I like to be able to look at both views. I don't mind having crossovers on one and volume on the other. I like to just look at the market from different lenses. That's just me. You might say, hey, Sean, I only want to look at volume charts. Cool. Or I only want to look at time charts. Great. You're just using it for the entry pattern. The levels are regardless. You could take these levels and put it on your order flow algos or whatever else you're doing. I don't care. The levels are going to do what they're going to do. You might have a different strategy that you're trading that you've been using since you were 15 and you said, hey, I love my system, but these levels are going to help me make a lot more money with it. Great. Then you know how to use the levels. If you want to use our entry pattern rules to enter on the trades, you can. The reason I choose a slightly more conservative entry, I don't like to just fade the level. I don't like to just put a pending order in here. Sometimes you put a pending order in here and you get a wicked trade. You can do that. And let me tell you that sometimes you're going to get run over. And sometimes you're going to use a confirmation entry. And guess what? Sometimes they work and sometimes you get run over. But it all boils back to the why behind the level. Why would you take a chance at an aggressive first touch entry or a conservative cross entry, because the levels are from fundamental hedging that we spent all morning explaining the relevance. Capiche? That's the edge. And sometimes it will give you value that if, let's say I got a pattern here, sometimes I'll get a small down bar. Like I'll get a small down bar because you don't know what the market's going to do. And then all of a sudden you get an up candle here, and then you get another up close, little tiny bars for whatever freaking reason the market stayed really tight. And you get the entry pattern on a volume chart or a 5-minute chart or whatever you're using. Yeah. But then I go over to the range chart and I don't have a cross yet. It's in those moments where you might have that misalignment where you may not be so aggressive on taking a trade on the time or volume chart because you want that momentum on the cross to happen. And then there's sometimes when I see the crosses, they happen so fast that I don't get an opportunity to engage. Like in an environment like this, I'll show you an example. Like I can see the cross happen on that close, so I would enter immediately on buy market, boom. And then I might have caught a little bit of that move. But if I was waiting to get a pullback and I put my pending order here, I would have never got filled. And that's the difference between understanding like how you choose to enter the trades, which is part of the discretionary battle, right? Like that is one of the reasons why you have to get good at how you enter trades. I'm very interested to see what it does in these levels. I'm very interested to see when it gets down to 70, what that entry pattern is going to be. How many of you guys have learned something from this morning so far? Jim, I gave you that prompt sheet, so you can upload that in the document.
Yeah, we'll update the AI sheet and just add it in there.
So I'm going to remove the gamma for today and just get everybody to focus on just the open interest, because gamma can take you to an entirely different level of like time and posting and all that stuff, right? I'm going to go here and not a whole lot going on in the markets today. So let's go through and let's take a look at, so let's just, I'm going to break this down a little bit. I'm going to reload it. Yeah, we're going to do another one. So I'm reloading it. I'm going to make sure that I'm on the highlighted 0.25 DT options. Okay, perfect. Now, on markets like the NASDAQ, I always use ChatGPT. Why? Because it's very thick, which means there's a shit ton of open interest at a whole bunch of different strikes. When I go into markets like markets like this, and I take a look at the look at all the strikes on the S&P. It's just so thick and there's so much noise. But if I go into like the Russell, like I love looking at the Russell. Like I really like that. To me, that's a gift. That is a gift, people. It's very easy to understand that picture. You may just become a Russell trader for the rest of your life. Nothing wrong with that.
I like
Make a
it
lot of
better,
money trading
too.
the Russell. What's that?
I said I like it better too. A lot less levels to work through.
Yeah, the YM can be very simple too. You could look at I like looking at thin markets. Why? Because institutional hedge ends very erratic. There's nothing wrong with being a crude oil trader for the rest of your life, or a gold trader or a Russell trader. Like you got one index and an energy and a metal. What's wrong with that? You got 3 markets to trade. It's a lot of freaking information to process. Yeah. Like you say, how come we don't trade the S&P? Well, because it's easier for me to read the institutional decisions on these 3 markets. Nothing wrong with that. Truly nothing wrong with that. Let's map this out. Right? Take a screenshot. I'll show you here. We're going to do it one by one. I like to just go to, here is a picture of the RTY. Do the same. Once you've given it a prompt and it understands the conversation, it knows what you want, and then just go in and what's the current price on the Russell?
$22.89.
It's interesting. I was able to find the price. 22.88. So there it is. This is the MNQ, GC. There we go. And that one. Gotta love the new. So let's talk about this, right? Like let's just put this into perspective. I like to just do this so I can just draw my levels. I haven't looked at the YM for, but probably pretty easy. They were pretty thin markets. I go down to the strongest, right? Let's just verify that information. 2275 and 2310. 2275. Look at that. Look at that wall of puts. 2275. Huge wall of puts. Okay. That they're going to try to keep it above 2275 today. That's what that's telling you. Let's put it down there. That's this wall. We never got there. That's fine. That's the wall. The big wall. Okay, that's the big wall. And then the next one, it tells me the big resistance at 2310. Good to know. There's a and I just lost internet, guys. You guys okay? Can you hear me? Can you hear me?
Yep, we're back.
Guessing. It always
It was
does
only
something
like
shit.
5 seconds.
Yeah. Rogers, eh? Canadian Rogers. Whoever's in Canada, you have Rogers, they're shit. I gotta use Bell. Yeah. I'm out in the country. They give you these nice houses, but they give you shit internet. Yeah, I'm about ready to. I'm about ready to tattoo Starlink on my body. Okay, so let's go into the support. So 2250, 2275. Okay, let's go into this image. There's no support in here. You see that? There's nothing, right? There's nothing. 2270, 2260. So interesting enough, they really don't give you much information on the support side. 2290, which is little teeny support in here, which is, you can see that there's very little calls or puts here. So let's go into the resistance for a second. Resistance levels, 2290. And there's the reason. Because it broke above the resistance and it became the support for the day. Once it broke that wall of calls, that became the support. See that? So let's do this. $22.90 here. Hasn't got it. $22.80 is the support here. Okay. It broke through it right here. It broke through the wall of calls, which would have been resistance. And there was no pattern, and we cleared it drastically, which means all the people that were hedging right here got squeezed. And that's just the dangers of expiration options. So therefore, what happened? It became your next level. And that's important to understand, that just because you have a level, if it fails, that is the opposing levels. Not drawing trend lines, not drawing freaking structures, and maybe that's a boss break or all that kind of shit. No, no, no. It's just hedge levels, guys. Okay. So let's go in here to, let's go just map them out. So resistance, 2280, 2290. We're at resistance up here. It's the weakest resistance though. Yeah. 2290. Okay. Weakest, so I'm going to drop that third. I'm going to drop it down. There's a reason why we don't enter on anything. We just wait for the patterns. Did we get an entry pattern on this? We did here earlier, but they're probably going to try to attack the big levels. So let's just do resistance 2290, 23, moderate resistance. So let's take a look at the entry pattern on this. And you can use it as a like a little bit of a force field, like, you know, if it doesn't touch it to the tick, right? You know, you can make a decision if you want to like I have a tool in TickBlaze that we've built for this purpose alone that'll come when it's come. It's called the horizontal LZ. And it's designed to be a line. And let's say I want to use 10 ticks above and below. So I could come in here and I could go 10 ticks. And what this does is it allows me to create what we call a buffer zone. And instead of using lines, I've created this, which basically just gives me a range around the level that allows me to use it as my support or resistance. Yeah, it doesn't have to be an exact to the tick, right? You can see it came up here. And remember what I said about my entry pattern. My entry pattern is very clear. If I come off a key area, okay, or a key area, pay attention to this. Broke the lows, didn't close lower. Lower closes here. That's a large ways away. Guess what? I'm not going to just enter on the close here. The market ran from the level. So what do? I could easily just come in here and put a box around that area. I can enter anywhere in this area for a better short. And that gave me a really good short. That gave me, it's coming from level, go into level. I got a much better chance of shorting up in here, drop it down. Now this is early and it's going into the market open. So that's why it's back and forth. But let's do it from the other side now so you can see this. I love how TickBlaze is so much cleaner with the drawings, Jim, because we fixed a ton of shit. Take a look here. Can you guys hear me okay, or am I lost again?
You're fine.
Okay. So came back down here. Broken resistance became what? New support. It came into the buffer, came and touched the level. Higher close, higher high. I could have entered by market right here. Okay. At any given time, I could have entered right here. Now that's a bit far away from the level, but it's still valid. It's area. Okay. Same thing here. Came back to the level. I don't trade retests unless it fails. It goes higher. Did it go higher? If it sweeps the liquidity on the level, which it did right there, and gives me the next pattern, take a look at this. Lower low, lower close. It dropped. Stop goes here. It's almost 2-to-1 on that trade. So this is for me to kind of explain to you the way we enter this. Now, we're going to wait. We're going to wait and see how the market reacts off these levels. Now, if you're trading long from this level here, yeah, it's a really good trade. Really, really good trade. Strongest resistance 2310. They may want to take it all the way up. They weren't letting it get down to 2275. They were defending that. And realistically, I just want you to understand something. The way I like to do things is I like to think of this as like a demand zone or a supply zone. Whenever I have a big position like this, I call that the wall. Like that is the rock wall, like that's the foundation. But I'll always go to the next strike and pretend that that's like a demand zone. And that's exactly what this is. Demand zone. Not based off of demand levels, not based off of some indicator, based off hedging. That's demand, institutional demand, not some nice shiny little object that you buy from a vendor like us or anyone else and buy the zone. Hey, we've got them, we sell them. Hey, they look nice, but they are not doing the same information. So if I'm taking a look at this, 2280, 2290, the strike between 2290 is 2285. So take a look. They came from 2290 as the next wall. 2285's got nothing right there, which is why they didn't drop it very far. There's nothing here. 2280 is where the next level was that they failed to hold, which became the next level of support. 2300 is hitting now. You see this? 2300 is hitting. We are at 2300. According to the information, it's moderate resistance. Okay. $2,300's here. We are now in standard deviation section 2. It's a 95% chance. There's a 95% chance the market is expected to stay within this range. 95% chance it's going to stay below 2,300. Keep it cool, Bill. There's women in here. Sure, they understand the joke. I get it, Nikki. Just thinking of you, ma'am. Take a look. Have we got an entry pattern yet? Not even close. If we go into the range chart, real strong trend. Okay. And if you didn't get the entry pattern here, like I want you to pay attention to this. I'm going to draw a circle here. Coming out of 2280. Okay. There was 2280. Strong trend. You see how those EMAs are just ripping? Strong trend. Got the cross, came back for the fill. Really nice entry pattern on the cross. Could have got it on both, but some people like the candles and some people like the EMAs. Like, you guys tell me what you like. Jim and I just put together a few different tactics for entries, yeah? Now remember, if you're shorting a freight train like this, they may not just go here and drop like a rock. Could. Nobody knows that. We don't know if this level will hold. We know why we're attempting to trade it. Okay. I know why I'm attempting to trade it. But what if they want to attack this 2310? There's a 99.7% chance they're going to stay between that. Nothing wrong with waiting for them to show us, giving us an opportunity. And even if I took a stab at this level, if I make some capital, great. If it only gives me a base hit, great. If it gives me a huge runner, great. If it doesn't and it goes here, then I trade that one. Why? Because there's a less than 0.03% chance it's going past that level. And if it does, there's something going on that nobody knows about. And I wish someone would teach us that, because there's not too many chances that's going to happen. Like, look at how the NASDAQ ain't doing what the Russell's doing. Totally different markets. So we're going to watch this. Jim's got his eyes on it. 2300, it's moderate resistance. Which means it's the second strongest level of the day. I haven't done gold yet. We haven't done gold yet. Let's go take a look at gold. Let's duplicate gold. Let's change the market. Go down to energies. Go to metals. Go to gold.
26.95 looks good for resistance. It's kind of stuck in the middle though. But
26.
Yeah, 26.95.
Okay, give me a second. I'm gonna wait to see if we get a trade here. So it's coming to the level. They're going to try to defend this level, or they're trying to hold it. There's a pretty big wall here. Think about this. This is a standard deviation level. So the further we get out on these standard deviations and these levels start climbing like that, that tells a story. No pattern yet. No reason to freaking jump in and no reason to get excited. What if they don't want to stop it here? For whatever reason, they're just going to squeeze out. Maybe BlackRock's pissed off at Vanguard and they're squeezing them out today. Who knows? I don't know. I don't care. All I do is I wait for the pattern, because I have to wait for the market to peek its head. I am not sitting here trying to stop a freight train. Yeah. And this is why I don't fade reversals, because sometimes they work and sometimes the market does what it's going to do. Right? That's a strong moving market. Yes. So let's go into gold. I'm going to take a screenshot of this. I like to open it up so I don't miss any strikes. And I'm in an open interest. I'm on the vault to vault. I'm on gold. Take a screenshot. Yeah, we're going to do it. Yeah, we can do the S&P after. Give it a sec. It's got to process the data. And a lot of times there's a reason why they're doing this. Like if but the key here is, I just want you to, what is the biggest thing that stands out? Like, what is the biggest thing that stands out here on this picture on the Russell? What do you see here that is just, which one is it though? At 2275 to 2280, the wall. Okay. So the key here is to understand that this is the most powerful play of the day, which is why it's doing this. From here. It's really important you understand why the market's doing what it's doing. It's not to say, oh, we're trending today. Yeah. Why? Institutional hedges squeezing the shorts like a sore thumb. Pretty good reason for the entry patterns, eh, Jim?
Yeah.
I don't fuck with it. I don't mess with just trying to fade it. You want to know why? Because fading it is basically saying, I know what the market's going to do. No, you don't. Nobody knows that. Not a freaking scientist knows that. Not a clue. Nobody in here could pay me $1 million, tell me that they know what the market's going to do. We have a pretty good understanding. And you could get lucky once in a while. I've got lucky. But what it does is it tells me that when I gamble, it reinforces gambling. If I wait for an entry pattern, I'm using risk management principles to trade. If I fade the market, there is a chance that I'm just guessing. Now, the level has power because we're taking the information from valid information. Now, if you're somebody that says, I fade every level and I trade it with a static stop and I always do that, and if it gives me my win, it gives me my win, that's different. But most people don't do that. Most people don't trade every level with a static stop and they always hold the same stop. Like it's not. What happens is they'll fade the level. They see the trade going against them. They move their stop. You know, Jim's one of the most disciplined traders I know. Every time you get stop, you never move your stop, Jim, do you?
Yeah.
Take a look.
Moving
We
stops never
overshot the
helps
level.
anybody.
Look at this. What are they doing? They're offloading here. But we're in the middle of no man's land. 2305, there's nothing going on here. 2310 to 2305, that's the buffer. You see that? That's the buffer zone. Now they started to offload, but they ran away. I would never enter. For me personally, I might miss this trade. I don't like when it runs away like this. For me personally, I like to wait for the market to come up because look, it just swept all those candles on. That is what is that candle? What is that candle? Think about this. If this took all of that time to push that, do you think that that candle is enough time for them to unload all that orders? No. There is a very good chance we're going to come back up and test the highs. And if it doesn't, that's okay. But you're not sitting there getting short here on a retest of resistance that's now testing support. Wait for them to sweep that stop. The likelihood of them sweeping it is better. Now, if it doesn't, you have to take that. You have to be willing to say, you know what? I missed that trade. That is okay. It is better to miss a trade to plan risk than it is to just get in and take an unnecessary amount of heat, get stopped out, and then have to re-enter. Does this make sense, guys? I'm trying to teach you how to think like a risk manager. Because to me, this isn't resistance anymore. They failed it. They blew the wall and they're attacking these hedges. Let's go and do gold. We'll wait and see if the Russell wants to give us a better entry. And if I miss it, I'm okay with that. You have to be okay with missing something because you're going to get these trades every single day. We could have had a lot of trades on crude. Let's see, crude. There's the entry pattern on crude again. Right there. We just came back down to support. We broke the high. We had a higher close. What just happened? From the close to the retest of the highs, you got an opportunity to enter that trade if you choose to. Right there. Entry pattern. Let's go to the range. Just got the cross. Imagine that. Got the cross, pulled back into the EMA. Got the cross, pulled back into the EMA. right? Different information, different chart, different view. Same level. Now, I've seen the market do some crazy things. And if it wants to just drop like a rock from here, we have no idea that that's going to happen. There's a very good chance this will pull back and try to offload more size. Okay. There is also a certain chance that this will just drop like a rock. We don't know that. How many times do you see the market test the highs and run the stops? A lot. How many times? More than not, right? You have a more chance of them sweeping the stops than you do missing the trade. So I would rather play the sweep of the stop play than wait. Now we are at the very edge of the bell curve. Like I said, there is a chance, but you have to be willing to accept that discipline, guys. Okay. Let's go in here. Take a look at gold. Good old GC, baby. What we got for the GC markets? Gold. Okay, let's pull this out, see what they said today. I like to just start here so I can just map my levels. Strongest support is 2680. Interesting. Strongest resistance is 2740. Way the hell out there. Now, that doesn't mean we're getting there today. That just means that's the bell curve. Okay. Now, let's map out some levels. Let's do all the resistance first. Right here, 2720 and 27. Interesting. What do you see at 27? They came up earlier today in the overnight. This, you probably wouldn't be trading this, but this would have been there in the morning. That would have. So let me take a look here. 2700. You got the lower low, lower close. You could have entered here, or they upticked a bit for a better fill. You could have at least got a base hit. What did they do? They came back up. Remember, I said I won't re-enter a level unless what? I won't re-enter a level unless it sweeps the highs or the lows, depending on the level, right? So if I enter on a retest, okay. Look at the lows here. I just want you to pay attention to what's going on. This is 9 o'clock off the pit open. Lower low, lower low, lower low, lower low, but we never closed below the lows. You see this? We never closed below any of these lows. Closing price is key. Didn't close below any of the lows. We swept the stops. Lower low, lower close. First one. First time it closed below the lows. They decided to do what on that level? That's the first chance we got for a clean entry. Sweeping the stop, sweeping the stop, sweeping the stop, or trying to build their position, getting better fills. Entry pattern's key. If you learn one thing from me, don't be afraid if you miss something. Be afraid of blowing out your account because you're jumping in too soon. That was the short on gold. Right there. Sticks out like a sore thumb, I'd say. Now, could you have done that 2,700 on a range chart? And this is the reason I tend to, this is the reason, this is just me. This is the reason I put more favor to the volume charts, because sometimes, this is me, I have my preference. Some people don't. Okay. My preference is very simple. Okay. If I see one cross fail for whatever reason, they're not ready, I wait for the cross to cross the bigger levels. I wait for the white to cross through these levels, because sometimes you get a cross and they sweep the stops and then you get another cross. You don't know how many times they're going to do that. And so you're going to be able to see this more and more off the levels. But the key is this, right? Like, you still would have been able to enter on the cross here, but you would have got stopped here. If you entered here, you would have got stopped. And so I'm trying to teach you how to understand how to participate at these areas, right? And it's this is just one of those reasons why I tend to favor the volume charts for my own personal preference, but I also see the crosses work a lot. So it looks like they're really offloading, and that's just the way it was going to go. So had you have just entered there, you might be sitting in that, but look at the grind of that. It's not a big intent. There's not a lot of clean price action. So, but they did keep it in between those strikes. You can see that. It's good information, right? It's good information to learn this. Let's go into gold. Support levels. So 20, there we go. Let's do support. And see, it picks the strongest. It picks the strongest because that's what I'm asking it to do. But if you take a look at Miss 2690, so if I go back in here and I look at 2690, this was a put level that failed. So this is something you need to understand. And if you take a look at 2690 here, below price, if you see this below price and they barrel through that, that's a squeeze. There's a whole lot of people that got really hurt on those trades. And so if I map out, can you write this down, Jim? 2665, 2675, 2680, and 26, like, let's just do it right here. I'll do it beside the chart. It's easier for me to do it like that. Let's do 2690. When they plowed through 2690, okay, if they overshoot the level, it's failed. It's a squeeze. It's a hedge that failed. Okay. And they get trapped. These positions get trapped. And their 2690 became a major level of support. Okay. So this is why they held that level and they defended that level, because 2690 was a huge level of resistance here. Right. We never got to 2670 today. So if you think about price, 2670, we never traded there today. So this is the only valid level here that matters when the market opened and when it failed to be resistance, it became the floor for the day because everybody got squeezed. Sometimes you see this bar. That is the high. Let me take a look here for a second. I'll just take a look at the tough read, eh? That would have been a tough one, right? it didn't technically close low higher, I wouldn't take it. I'm very mechanical. So if I don't see a higher close, I wait. This was the higher close, right? This was the higher close here. This was the higher close here on the retest. This was the higher close here. And after the market proves that it's holding its high, it's holding the strength. That's where the buyers kick in. I'm not the only one waiting for confirmation. I'm not the only one waiting to see what the entire market is trying to do, because that's what closing price is telling you. If the market can hold itself in certain directional bias, like that's all that matters. And so if you're really disciplined, you just enter at the close of this bar. Now, if you did that on the Russell, look, I told you, you could enter here, but you overshot that level. The difference between gold, what's the difference between these two patterns? I'm going to see if you see it. That's the NASDAQ. What's the difference between that level and getting that bar versus that level and getting that bar? I want to see if you guys understand this. What's the difference? You guys hear me? Did I lose the internet? Jim Simmons, are you there?
Nope,
This is God.
nope, not here.
I need to know if you can tell me if my audio is working. What is the difference between this example with this bar and this example on the Russell? We didn't overshoot this level. We drastically overshot that level. So if I'm going to enter price that has left the area a bit, I would have rather done it where I got the reaction here and then I got the close down here. I would rather do that. Does this make sense? Because it's telling me that resistance is being respected. This is telling me that support is being respected. This is telling me the market's messy right here. And there's a very good chance that they've got so much size that they're going to just start offloading. They know that this is the resistance hedge. There's a lot of big traders can see that. So they're just going to dump. And that's what that big puke was. That was a big dump on purpose. Now, if we get another situation, right, where I get a lower close in here, this might be the resistance holding on the retest. You see this? Look at that. That's cruising down. And there's definitely a chance to take this now because they broke below, they retested on this. This is a lower high retest. And if I get a lower close in here, right, like this, there's nothing wrong with trying to take that as an example, because now we're sitting here. This is definitely something that could be played. You could definitely trade that short if you choose to, or you can be really disciplined and wait for them to sweep that. You may not get to hold on a lower high retest here. It's a choice. You have to make that choice. And it's nobody's right if you make a choice. You live by that choice. But we got below it. We came up for resistance, which is a lower high. We get another entry pattern holding on that resistance, right? And it's the second strongest wall for the day. It's the second strongest wall for the day, 2,300, right? Yeah, Exactly, Leon. Yeah. You see that? You see that lower close right here? Okay. That's valid, but I'm personally going to wait for them to sweep the highs. Me. I always like to wait for them to sweep the highs. That's just me. Now, I might miss this trade, and if you enter here, you're perfectly valid. And it may not sweep the highs if their NASDAQ drops heavy. Make sense? So this is definitely a clean entry if you choose to enter here on this lower high retests. It's a very clean entry because we're close to the top. It's just, I personally see these as, I see this as a potential divergence play where they try to sweep the stops. And I really feel that like that is going to teach you a world of discipline if they do this. And you may miss a trade, but if you don't and you catch the great entry, you're going to thank me for that. Now you can go in with less size, drop the size and take that entry and trade it, and might catch a really good trade. Makes sense. Let's go back into gold. Yeah, crude stuck in between strong support and strong resistance is really having a hard time doing anything in those levels. Yeah. The better trade is when they take the lows. So let me explain that. The better trade is when they take the lows. That's a better trade at 70. Yeah, crude's really slow today. So let's go in here and let's go back to ChatGPT. GPT. So 2,700. 2710, 2720, 2700 is weaker resistance, but they held it, and 2690 is the support level. So if they break this 2690, then they may want to go down to this next level here, 2680. Mm-hmm. And there's the lower high retest holding. So it's I missed the sweep, and that's totally fine. Totally fine. There's a 99.7% chance the market's not going outside that level. So the fact that it came very close to it with a lower high and you had an opportunity to short that, did anybody take that short? I don't know if anybody tested that or not. I don't know if there's anybody in here taking a stab at that. I mean, it's you did, Brian. So let's talk about that for a second. So let's say you took that short. You did too, guys. So let's take a look here. I just want to talk about this for a second. So let's say you took the short from 2,300. Yeah. So to me, the logical target is every strike price down. To me, the bigger target is 2290. So if you think about this, I'm short for 2300. Okay. If you got a good entry on the right entry pattern here, to me, that was it. Okay. And ultimately, I would basically plan my targets here. Which is great because ultimately, if you think about it, a 1-to-1 is here. They just came to it. Now, I've told you, for me personally, I want to wait for the sweep. Okay. Because I am trying to teach myself to be more patient If I overshoot a level, there's a reason it may want to go to the next level. And so for me, I've been more disciplined. There's nothing wrong with taking this short, by the way. It's just knowing why I'm doing what I'm doing. And so these are the logical targets on the way down. Every 5 points. Scaling out. Does that make sense, guys? Now, why is it not dropping really quickly? What do you think's happening here? How much time did it take to build that position here? Like 5 hours, right? We've only been here 20 minutes. I'm going to wait for them to sweep the highs, attack this level, and I'm going to enter here. That's my choice. How you choose to trade this level is your choice. I can teach you the entry pattern. I can teach you the level. I can't tell you to engage. It's against the law for me to do that. But I told you before, if I overshoot a level, there's a chance it's going to the next level. And I want to wait for them to sweep the highs, unload those positions, and get a cleaner entry. Did I not say that? That's me. Why? Because I see it happen a lot. I see it happen a lot. Everybody says, oh, they're after my stops. No, they're offloading a lot of business. And the goal of any buying and selling of anything is I want to sell higher and buy lower. So if I am trying to offload this, right, I want to make as much money as possible on my longs. So I'm going to start peeling out some profit. It's going to cause a pullback in the market. Then the market's going to allow some follow through, and it's going to allow me to peel off some more profit. And that's where the rest of the liquidity's gone. It's not like we call it sweeps because it's a term that traders say, but the actual science or math of what's going on is the market needs fuel to basically fuel the opposing side of the book. Like it's makes sense. Now, if we swept this, right? It's crazy how it's just pegging it here. Steven, I don't know, brother. I never tried it, right? I never did try that, right? Anybody can try anything. But tell me that this isn't, are you guys happy with what you're learning here today? I mean, this is some pretty unorthodox stuff here. We never did the NASDAQ levels, eh, Jim?
No, I think that's kind of round two of training, I think.
There's a lot of levels on the NASDAQ. Yeah, there's a lot of information on the NASDAQ. A lot of strikes. Be selective. So you see here, I want to explain this. Okay, so let me explain a few things. This was the first test. This was the second test. This was the higher low attempt. If they were going to truly trade this higher, this low would have held. That's why you don't see me placing trades on here, because this low failed. So I will always wait. If I see an attempt fail, I already got my profitable trade. It's a scalp. It didn't give me the full push because the market wasn't ready. So if I see this not holding, then I'm going to wait to play the next level. Okay. Let's do the NQ. The curved line is a volatility line for option traders. No, we don't care about it. You can put on your skis and slide it down, but it gets a bit like there is a little bit of value here in understanding how this is spiking above the volatility skew. Those are critical levels. But so is this. 2,300. Did we hit 2,300 today, Jim? We did. Yeah. Let me explain a few things here. 2,300 was a put level that failed. So we're going to go in here and take a screenshot of this because a lot of strikes. So I like to take a screenshot and you could do the S&P. You could do the S&P. It's coming in here. So let's show support. So it skips some strikes because there's a ton of information on the NASDAQ. And I'm going to go granular, a little bit more granular so you can see the strikes. So you see what I did as I zoomed in to be a little bit more like that. I'm just going to say don't skip strikes. Try that. Don't skip strike prices. I don't like when it skips strike prices. You have micros on yours? I didn't know they had micros here.
Yeah, I highly doubt institutions are hedging with micros. They're
No.
it's in the middle section. I've never looked at them. I think it's probably
Yeah, they do here, but I wouldn't put an emphasis on that being the decision maker. Yeah. Look what they're doing, Jim. What did I say? Now, it hasn't happened yet, so I don't know what's going to happen here. But it's going to draw a little guy here holding a broom. Time to sweep the floor. Time to sweep the floor. I don't want to be right, David, because I can't pretend to be that good. I do, however, want to see things repeat themselves and have a reason for making those decisions. I think the biggest thing I've learned in 10 years of trading is that I'm never right. I just get better. Trading is obviously a matter of probabilities, risk reward, win rate. The reason we look at that is because we're never right all the time, right? But it feels good to see the things that I'm doing reinforce those decisions, right? Reinforce those decisions in my brain and help me tell myself why I do the things I do. Now, some of those decisions cause me to miss some trades and make different decisions, et cetera. But what matters most to me is that I always have my levels on the chart. And every single day I see the market react to them, which builds so much more confidence and so much more, I guess you would say, just proof in the pudding, you know? Daniel, thanks, Daniel. You know, let's go here to the HC. So let's just do all the support levels. Strongest support is 2200. So right here, look at that. Strongest support within significant, right here, 2200. What did happen at 2200, Jim? What happened? They came right to the wall. And what happened? It came right within it. Within a couple ticks. And this was the higher close. Yes? Do you see it? When can you enter on the higher close? When you see the level hold. Make sense? $21.50. Strong support is at 2100. And that's the three strong ones. I'm just not going to plot the other ones for now because we're probably not going to get there in the morning. Now let's go down here to this. Now we did sweep the high on the last rotation. There was a sweep. See that? We swept the high. So there is a chance that that is the sweep. It doesn't necessarily need to sweep the only high. It did sweep liquidity here. If we get another pattern, you can enter there. Like I said, if you still entered here, you're taking a little heat, but your stop loss is still here. So there's no reason for you to assume that it's a failed trade. It hasn't failed, right? If I get another close here, a lower close after a sweep, that meets the definition of the value of doing this. If I get a lower close in here, there's nothing wrong with taking a stab here. Does this make sense? I want to see a lower close because we did sweep a high, which means it fueled liquidity to drop. Let's wait and see this candle close lower. There it is. You see it? Now, there's risk here. You can choose what you want to do. If you want to take that trade, nothing wrong with taking that trade. If you want to wait for them to sweep the top high, you can do that too. Either way, you waited for a sweep, right? Which gives you a little bit more evidence that you have a higher potential of this dropping. Does this make sense? Now, personally, I already told you what I'm doing. I'm waiting for the high. Okay. I'm just telling you what to look for when you get another chance, because it will happen again, and it will happen every day. It happens on gold a lot. Okay. But the entry is here. If you choose to enter right now, that's your choice. The entry is right here. They're really offloading here. Takes a long time to offload a big book. Now, let's continue up for resistance. Look at strongest support is 2200 for the day. Do you see that? I told it not to skip strikes. Where did they take it? Where did the NASDAQ off the overnight take the market? Strongest support. I didn't tell you that. ChatGPT told you that. I didn't sit there and tell you, believe me. I said, here's the frickin' data. What does it mean? And let's use it objectively so that we can be better traders. Nowhere did I try to tell you I got some fancy shiny object or some cool indicator that's going to give me a divergence twist with a little bit of a flambe on it. It's fundamental data that institutions are using to cover their asses on a zero DT option squeeze. And you can make a decision as to how you want to participate with those levels. Now, you could use this with your supply and demand or your SMC order block system or your Bobby freaking order flow flavor of the day. Like, you know, we've got 100 systems in ARC and I love all of them. I've built them. I spent the last 10 years building great software and there's a time and a place for everything. This is institutional levels. You can, at any given time, they're available through the day at any given time until the options expire. Now the market's really calmed down. We don't have a lot of news going on right now. So we'll see. Okay, gold, oil. Look at this. These guys might come down to spit their head going into the European close. We might get trades here, guys. We might get trades here on oil, and we might get trade on gold. Right here on this dotted level for gold. And this big, thick bad boy here on crude, I'm waiting for the level. Wait for them to come down and cover their hedge on that. And when it breaks below it by a decent amount, there they are. They're going to pump this. Let's see what we can get. So they're sweeping that floor. What are they doing here, eh, Jim? Like you always say, they're going to sweep the liquidity. There's a very good chance they could sweep that. It's a range bound day. So they're going to try to take out the edges of the range. The edges of the range, the edges of the range. If you're looking at a volume profile, that's the point of control. Value area low, value area high. The key is that it's interesting when you plot that stuff on a chart, how it basically lines up with the institutional levels. I promise you, the volume profile is being created by what the traders are doing at those levels. Those levels are what those decisions are made on, which creates the volume, which then plots the profile, which then tells you to trade where the banks are trading. You got to understand the order of order here. This stuff comes before the volume profiles or the order book or the order flow, because these are decisions made to cover the O, P, TIO, and S options. Let's keep a lookout for crude oil. Let's map out the resistance before I lose it here. Resistance levels, biggest resistance 2450. Okay, so this was the biggest bad boy of the day. Let's put some dashes on it. Yeah, right here. And now what we're going to do is we are going to map them out. 425, weaker, moderate. So where's the moderate? 425. So there's some pretty good resistance between this area here. Like that's a pretty big wall. 400 was the resistance in the Globex, and they hit that. It's interesting how they took it down to 350. Like that's exactly where the resistance was at 350. Where was the short, everybody? Tell me you can see that. Came into the resistance, took out the low, had the lower close. That was the short. It's the same pattern I keep showing you everywhere. You had a huge long on the market here. And you had a gray short right here. Two banger trades. These are not small drops. That's the trends for the day. You're catching the moves. Make sense? Now, did anybody take the short on the sweep? I don't know if anybody else did or not. I've done my levels for the day. Normally these would be all done pre-market, but we're doing them simultaneously to show you what's happening and show you what's going on. And there's your playing field. Nikki says no shortage of trades. Yeah, well, there's a lot of movement, but like understand, like I don't have any indicators on my charts. And it's interesting how the market's going from area to area on like why? Like, why is the market respecting these areas? You see how this is starting to drop now? Another flood here, right? I don't know if anybody took this trade. Did anybody take that trade after the sweep? There was a sweep. There was a sweep right there. And if it gives me the pattern, I'm going to take the trade. I haven't recalculated them once, have I, Richard? You can do them. I would do them maybe after the European session closes. So you go into the afternoon. I don't tend to recalculate them unless I have a reason to, like they overshoot or they, but like most of them, like normally I just do them in the morning, Richard, like once like this, because these are there for a reason. Yeah. Now, normally I wouldn't be spending an hour in the morning going over theory, reading a bunch of texts that you guys can read over tea leaves and coffee later today. You're going to use these cheat sheets as your cheat sheets, right? But like normally, like we would have had an opportunity to trade some of these right into the open session. We would have been able to participate most likely in the gold trade, right? Long and short coming in off the open. Right here, this was pre-market, so you might want to, depending on how early you got up, you would have been able to participate. On the oil trade, we did take the trade. We missed the short. We missed the long because that was pre-market activity, right? That was 6:30 to 7. This is basically 8 going into the open. That was the open. And like the only reason I'm not trading the Russell is because I'm trying to teach you a few different ways to look at what's happening, right? I'm trying to teach you a few different ways to look at what's happening at these levels, right? But like you would still be sitting in a profitable trade right now if you entered here or if you entered here on both those opportunities that I explained to you. Right? Yeah, I don't trade past the pit close. That's crazy. Yeah, if you're trading gold or oil past the pit close, you're asking for major problems. No, there's no institutions trading. So there's nothing. There's gold. Let's see what gold and oil are going to do. I'm running a little longer. Can I ask a favor? Can I ask a favor? Jim, do we have a Discord here for this group
I don't
yet?
know if they made it yet. I can ask them to.
Can you ask Ashley to make this? Can I ask a favor, please, from everybody here? Can everybody do me a favor when the Discord group is created? Can you join it and can you leave a comment of what you think of the strategy, how we're teaching it to you, what your opinion is of the value of the data? I want other people to learn this because if they don't, they may never understand what's going on in this business. Can you imagine if you didn't understand this now? Like knowing this information is very valuable. So the only way that I can get the haters and the skeptics to understand what we're doing is if the people that trust what we're doing now, uh, can speak for that, right? Now, I have said a few times before that I am waiting for them to hit this and approach the big level for the day. If it happens, that will be when I take my trade. Why? Because I have a feeling that they may attempt it. After seeing how well they're staying here, that is consolidation. Normally when that happens, you get a big spike and then you get the rollover. Like here. Boom, 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 boom. Spike. Fuel the pump. Let's go to gold. Yeah, I'm shorting this at this level. Yes, absolutely. Same thing with here. You get the reaction, which was a clean trade. It held. Oh, build, 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 build. Spike, drop. I like to see that. Build, 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 build. Spike lower, pop. Make sense? Push, spike, pop. There's a reason. It needs orders to take the other side. Let's see what happens. Now, the trades that I pointed out, okay, are not non-valid. Nothing wrong with taking an order entry or confirmation entry where I showed you. It's just I've seen that if the level gets overshot, it's normally because that level is not the level that they're holding on and they're going to approach the outer level. Right? So I like to tend to wait a little bit. Crude starting to poke its head. What did it do? Took out the liquidity under the lowest low. Let's wait and see if they're going to sweep the lowest low before we get a higher high and then a break of a clean spread. Makes sense? If I get the pattern here, you can attempt it. It's because they already did a sweep. They did a sweep here. They did a sweep here. There's nothing saying they're going to sweep this. There is a chance they could sweep it, but this is the strong support. And if they do sweep it here and we get the higher high and we get the close, then they're going to try to attack the other side of the range. I'm running out of coffee. Shit, too much talking, not enough drinking. It's been a long time since I ran a full day trading room, eh, Jim? Can you guys hear me okay? Yes? Jim just doesn't love me today. Never responds. Yeah, Jim's in a monster trade. He's covering it. He's hedging. So I'm just waiting. I'm just waiting for a sweep of the Russell to attack the big level here. I'm waiting for gold to poke its head. And then I'm waiting to see if, or so oil to poke its head, and I'm waiting to see if gold is going to come down and tag this level down here. The majority of them, we don't have any big fundamentals today in the US session. Like there wasn't any major news announcements today for the US. So that's why we get a little bit of moving on those hedges. Those hedges were the reason the market moved. It wasn't because of fundamentals. Those hedges were the market today. There's no other news coming out. So I would expect the rest of the day to be very quiet and maybe not. Like there's the sweep on oil. There it is. See what they're doing. They're sweeping that low. If they come down to 69.50, great. If they don't, no problem. They never did overshoot this. If we come back up now and we start closing higher, that's great. But isn't it interesting where they kept it? Hedge to hedge. Wow. Oh, it's a range, they say. No, it's a hedge. That's what creates the range. I would love for them to now close higher, break higher. I will not treat this as resistance. This is no longer support, excuse me. This is resistance. Therefore, if I'm coming down, I could look for an opportunity to short this down to big support. Makes sense? Just like here, this was resistance. They failed. There's the support. Important. You can trade. Yeah. So this is a great example. Like I know a lot of you keep saying order blocks and supply and demand and all that, but that's just charting. Like that's a retail discussion. Like you're never going to go into JP Morgan and hear them say, let's place an order block. Like, no, like their trade decision was made 4 days ago, uh, based off of an institutional oil tanker that's moving from China to Canada or whatever. Right? Look at the Russell. Took a lot of discipline for me to sit here and not enter that trade and just look at what it's doing. You understand that? I really want to see it flip this and just spike it. There's a very good chance it's going to spike that. So guys, I'm able to come in tomorrow. Jim's probably going to start the session off with you guys. Jim, you here, brother? Did I lose you? Jim Simmons. Is he here? No, he's not. He left. That's why he's not responding. I'm the only moderator. Yeah, Jim and I are going to be posting those all. It's all going to be there for you guys to have access to. Yeah, we're going to post them all in a section for you. So today was really good theory. Today was good practice. Today was good understanding. Today's a good, like, okay, this is how we're going to start this. The next session tomorrow, I would like to think that most likely Jim and I are going to just get into plotting the levels. Our levels may already be on the charts coming into the morning. So my suggestion for you would be to plot the levels. And even if you make a mistake or something doesn't seem right, like it's by doing, you learn by doing, right? So that would be the goal. Okay. And I've overstepped my welcome here. I have other meetings I have to tend to today, guys, or we can't keep the business and the thing rolling. But I need step-by-step guide to pull reports from CME. Is that Nikki? Were you here in the morning earlier when we did it all on the CME website? Not sure if you came in at the beginning part of the class or not, but if you didn't watch this recording, if not, come tomorrow. We're going to do it again. Yeah. Testing, testing. I think his mic is muted.
Say what?
He's back. Jim left me. Now he's back. So here's the thing, guys. Jim is going to come into the class in the morning. Most likely I'll be there as well. And I just have a meeting beforehand that it may run late. I'm not sure. But Jim's going to be there. He's going to plot the levels. So you may come to the class and his level's already on the chart. That's normal. But I would like to think that Jim's going to work you through on how to plot those levels and how to get those levels on. Remember, you can use gamma to increase the efficiency. But if there's no gamma, then you may lose strike prices from open interest. So there's nothing wrong with that. It's just understanding that aspect of that. Does that make sense? I hope you enjoyed this class. When we get the yeah, Jim's going to put the ChatGPT script in the members area for you to download. Yeah. How many of you guys are like getting excited for Tick Place? Tell me you're not getting excited for Tick Place, guys. This is some exciting stuff. Yeah, it's pretty exciting. Well, TickBlaze is the #1 competitor to MetaTrader and NinjaTrader. I can promise you that. We're the only technology that can overpower what they're doing from an algorithmic perspective and a discretionary perspective. We just finished all the development NuGet packages that allow us to be able to be developer friendly, et cetera, et cetera. And so we'll get into all that on the launch, but I promise you it's going to be well worth it. Take a look at what's happening here on crude oil. If we break above that high and we close above that high, okay, that is going to be the entry. GC's coming into that resistance, overshot it, coming back. What I would like to see is this hold for a short down to strong support. Mhm. This has to close. Did it close higher, Jim? It did. Buy market. We'll see what happens. It might give the follow through, might not, but I know why I take the trade. I already took a nice winner on gold already. Let's take the targets here. Let's map out targets. Let's map out the targets. Let's take a look here. Oil. Oil. That's oil. So I am long at 68.80. That's a pretty solid level, eh, Jim? That's on the third standard deviation. That's pretty solid on the outskirts of that. And I'm here at 68.30, 69. No, I'm down here, 69, 60. So it's right here. That's this level right here, 69.50 to 69.50 right here, right here. So this is this entire wall right here. And so I'm going to look at 70. 70.3 is the next target. So 70.3, which is here. So that's going to be T1. That's T1. Why 70.3? Because that's the next strike price here that creates the resistance. You can hold it to 71 all the way up to the high, but I like to scale out if I'm going to be right. 70 is a strike price here. That technically is a target here. Like if you really want to get into the nitty gritty of taking 5 ticks off here, you could. But the proper target is the next big strike, right? 70.3. 70 is the strike, but the level is 70, right? They just overshot the level a little bit into the lower strike, into the swept out liquidity. So 70.30 is going to be my cue. And then ultimately 75, which is the next one here. I always like to front run. We waited for that one, eh? Yeah, stop's always here. I'm in sim, guys. So just know this. I am in sim. This is a tutorial. Let's close all that out. I'm just waiting, guys. Just waiting to see if I can close this out before the end of the class. We're going into the European close. So normally, whenever I go into a session close, I don't care what's going on. I just take the risk off. It's a risk-free trade at this point. I have unlimited upside. I have zero downside risk. Why? Because it's a session close in 2 minutes, and it's the European session, right? At any given time, I could peel out 50% of my position right now, and it's a big R multiple trade. If I get kicked out, I get kicked out. That's the business of risk management. But the level held and the reaction gave me the follow through. You could have already peeled off some profits. It's your choice. Slow markets, nothing wrong with taking 50% off, paying yourself a little day trade. You get what I'm trying to get at here? You know, if you're trading 10 or 20 eval accounts soon with Prop Shop Trader, you know, that's a pretty big trade right there. You have to be willing to understand the point of going to strike price. There's a reason we're setting these at the strike prices. Ronald made 890 bucks. Great. I'm trading strike to strike. A lot of people think I don't know what I'm doing. Alien, like you imagine, like I go into these webinars and I I teach so many people about systems and software, and you know how many people say I'm a salesman. I don't know how to trade. But I'm okay with that, right? When you know the force is strong within inside of you, you don't react to that, right? You just know your strengths. I take some profits. Just give me a little reaction out of there. Gave a reaction off that strike. So we never know if that strike's going to be the next resistance. It drops it right back down to sweep the lows. We never know. It gave a reaction. It didn't push through quickly. So I don't mind taking a little bit of profit there. Right. It's pretty good target. 10 ticks below the strike. Move it back up. Banking some, you know. Now I'll hold all the way up to big resistance, right? Because remember, this was big support and it failed, right? So this could very well be big resistance kicking in here, and you know these types of things. And so I have no problem. And you could easily hold to the other side of the range, knowing that you've already put money in the table. But if you're a prop trader, and you are trying to scale and not have your trailing drawdowns get kicked out, you have to scale out. You can't have a target here and it goes all the way up and then it goes all the way back down. Even if you get a break even, you're going to blow your evals. You have to take profits as you get to your main objective. It's not about having a 3R multiple in every trade. It's about having a consolidation of maybe 2R multiple or 2.3R multiple based off of your combined R exit, right? Now you can move it to break even and you can leave it at break even if you choose and just give yourself a little bit more breathing room. But you know, nothing wrong with trying to get to the middle of the zone, right? There's more likely going to be a POC there for the day and all that fun stuff. But I'm 2 for 2 on the scalps. T1 hit on both of them, right? And both of them were on crude today. So like, where am I at? Let's take a look at crude performance. This is why Tick Blaze is badass. And let's just go take a look at crude's performance for the day so far. So yeah, it's not bad. Nice little day trades, base little hits, and teaching. Missed all the other trades, mind you. Right. Let's close this out. And I haven't even taken the sweep trade. Like the Russell's RQI is inching, yeah, inching like an inchworm. Mm-hmm. I think we're good, eh? Jim, I think we overstepped. We're going into the European close.
Yeah.
I think that's a pretty good day for the morning. You guys enjoy it. Watch the if this breaks down with a lower close, that's a resistance pullback to this. If you came into that at 69.90, okay, I got stopped out. No problem. Peeled out half of that. So take a look at this. We are with the trend. That's the level. So if we get the crossover here, that's sexy. With trend, overshot major support coming into resistance, that's a sexy trade for gold. Now we're really shitty time to be trading gold. So I'm not going to engage here. But if you look at the entry pattern, if you get an entry pattern here with a lower close on the volume chart, it's going to tell you the same information as a crossover with trend coming into major resistance. Jim's going to post those today in the chat room, probably with Ashley in the Discord, and then also with the members area for the ARC side. Yeah. Okay, guys, have a fantastic day, and we'll see you bright and early tomorrow morning. Enjoy.
See you guys.
Thanks, guys. Appreciate you. Hope you enjoy the day.